Hello and welcome to the Golden Thumb Rule, your go-to investing masterclass where we cut through the noise, decode the cycles and build not just portfolios but conviction. Well, I'm your host Shraddha Jananda and today's episode is titled Discipline Over Drama. Joining me today is a voice every investor in India has heard, respected and probably quoted at some point. We have Nilesh Shah, Managing Director at Kotak Mahindra AMC. A market veteran, a storyteller, and someone who has managed billions while making investing feel less intimidating. Thank you so much for taking the time out, Nilesh.
Thank you, Sitish Bhai, for having me here.
Right. Well, you always talk about asset allocation, but what does that actually mean for someone who just started out with investing, or you could say saving, and a lot of FOMO, you could say that?
So, asset allocation, in very simple sense, Sitish Bhai, is what you do for your physical health. I mean, most of us like sweets for sun, but we don't make it our staple diet. The staple diet still remains dal, roti, chawal, sabji. That gives us physical health. Same thing is translated in financial health. You create a portfolio of debt, equity, gold, real estate, so that overall it outperforms inflation.
Right. Absolutely. Well, Nilesh bhai, I will also talk about cricket because I know that you are a big fan of cricket and we recently saw 2 tons from Shubman Gill. Let us compare the cricket and the equity markets game. So you often compared investing to cricket and every cricketer has a favorite shot. What is your favorite investing shot? Is it the chart, SIP, asset allocation or value buying?
Look, Satish Bhai, before cricket, I want to talk about chess. Recently, Magnum Carlsen, said Mr. Gukesh is a weak player and I don't take him seriously.
Right.
Gukesh not only defeated him, but went on to win the rapid chess tournament. This is how the world will treat India. They will tell us, you don't matter, you are a poor country, you are a developing country. But we have to keep on working and eventually we can become world champion. Like Gukesh defeated Eco of Magnum Carlsen, India and Indian equity market will defeat criticism of global investors, global people. But we must keep on working hard. In terms of cricket, you have T20, you have one day, and you have test match.
Right.
The fun of playing is in the test match.
Right.
Where you take your time to build inning, where you play on a 5th-day pitch also. My favorite cricketing shot is the test match format, where you build your inning and play for the long term. T20 is exciting like trading, kabhi upar, kabhi niche. But eventually long-term wealth will be created in test format.
Absolutely. Long-term wealth would be created in the test format only. Now, I also wanted your attention on the SIPs. Now, SIPs are the OG advice, right? But in a volatile market, is it smart to increase SIPs, pause them, or just stay the course? Now, why I say that is because we are clocking more than 26,000 crores on a monthly basis, and especially for the new investors, what should be they doing at this point in time?
Like we have SIP, US has something like 401k. I have never seen any American guru or American fund manager telling their citizens, please don't invest in 401k plan. Month after month, it keeps on getting invested. And this created wealth of America. Today, half of American household wealth is invested into capital markets. Now, can we replicate that 401k model in India? Unfortunately, government went towards provident fund, new pension scheme, and stuff like that. Mutual funds stepped in to fill that vacuum. And today, we have so many successful SIP investors. They suffered pain. Of course, in March 20, their portfolios were down almost 30, 40, 50%. 3-year SIP returns were negative. 5-year SIP returns were below savings bank account. 10-year SIP returns were below FD account. Now, there were 3 sets of investors at that point of time. One which said, "Jo chal raha hai, chalne do." They are making double-digit return. They are outperforming inflation. They have real wealth. Then there was second investor which got frightened because of this massive drop in returns and negative returns. He or she booked the notional loss into real loss and stopped SIP and redeemed. Today, they are crying because they have lost an opportunity to make money. And third, a small portion was the real smart money. They said, "This is the opportunity. SIP returns are negative. Let me go and put lump sum money. Let me top up my SIP." Today, they have made even more return than the regular investor. Now, like 401k, SIP is the solution for financial security for Indians. Americans household have put half of their wealth in capital markets. Indian household is in single digit. We have a long journey to cover to secure every Indian. Satish bhai, SIP is a very simple concept. It is the year. There will be SIP top up. There will be SIP in multi-asset allocation. All those things will come over a period of time. But गाड़ी पहले गियर में डालेंगे तब आगे चलेंगे ना.
Absolutely. And in fact, staying with the topic, let me also get your view on when markets are booming or crashing, it is so tempting to panic sell or a FOMO buy. And how can young investors avoid these classical emotional slip-ups? And we have seen some of these situations replicate in the past few months, also when we saw a sudden dip and then, yes, markets also sort of bounced back.
First of all, we need to be aware that we are human beings and will be greedy as well as fearful.
Exactly right.
Natural reaction. We are not some nirvan prapt sadhu who can
Yes.
deep greed and fear. Being aware that I could be greedy or I could be fearful is the first step in finding a solution. SIP is something very, very simple. Second could be when you invest, write down why you have invested. A friend of mine, a mutual fund distributor, makes all their clients to write down why they are investing. Someone will write beti ki padhai. Someone will say bete ko business support karna hai. Someone will say my retirement. When market comes down, returns are negative and they feel fearful. His immediate answer is, do you want to retire today? Do you want to give education? Do you want to pay to your daughter's education today? No. Then please continue. This days also shall pass. You'll have to figure out a way. My best advice will be, please find a handholder, a mutual fund distributor, a registered investment advisor, which can handhold you during this tough time.
Absolutely. In fact, the analogy that you have given is something which investors can take note of and they can implement in their portfolios as well. And talking about portfolios, tell me something, is Gen Z really building portfolios or just building Pinterest boards of stuff they cannot afford yet? What does the data say?
In India, we have such a large population that every rule has an exception, and that exception is fairly large. I've met some of the very, very smart Gen Z people. They know about companies more than I do. I feel ashamed of my knowledge in front of them.
Okay.
They will become legendary investor over a period of time. They use technology to analyze data, process much, much faster than we old school people do. And they are much better than us after 30 years of experience in this field. On the other hand, I have also met Gen Zs who have no idea what they are doing. They get influenced by social media. They believe every tip coming on WhatsApp or Telegram is something which will make them rich. Many of them are so gullible that even AI generated deep fake video of people like us, they believe is truth. So I will just request Gen Z investors, traders, speculators, One, instead of trading, focus on investing. Second, please do a little bit of research. And if you don't have time or energy for the same, please consult a good mutual fund distributor or RIA who can help you build your portfolio.
Absolutely. Good that you talk about the social media, because the next question is something related to that. How much of young investors' money mindset is shaped by, we could say, Instagram influencers versus the real financial education?
Over here, we have a long distance to cover. Many people live out of credit card, not a good to go. Many people believe in instant gratification, not necessarily the best way to invest. Many people copy what they hear in digital ecosystem. Now, please remember, other than your parent, no one is interested in your financial well-being.
Yes.
So we have a mix of emotions, mix of confidence, which is not necessarily creating the best of the solution. Many people are learning after committing mistakes. My request will be, please learn from others' mistakes.
Right, some advice there coming from you, Nilesh. My next question is that only if you could sort of give just one piece of advice to someone making their first investment decision, what would that be?
My advice will be start with SIP. There was a legendary opening batsman, Sunil Gavaskar, always started his innings by playing into V, which is mid on to mid off area. Once his eyes set in, he started hitting other shots. The same way, when you are coming on to play on a pitch, your eyes are not yet set, ball is swinging, then it's better to play in V, which is SIP. Learn how SIP returns fluctuate. Learn how topping up SIP when returns are negative delivers better return. Over a period of time, you will get the feel how markets operate. And once your eyes are set, unfurl your other shots.
Absolutely, and in fact, we talked about the young investors, but there are seasoned investors as well who have been in markets for quite some time, and you've been a market veteran with decades of experience. So, according to you, or if you have seen, what is one mistake even seasoned investors still make that they should watch out for early on, like that?
I will say, whatever we preach, we should practice. Being human beings, we are also driven by our own greed as well as our own fear. Keeping that equilibrium is most important. We fall in love with our investee companies. We start getting this ego. How can I be wrong? Entire market is wrong, not understanding what my investee company is doing. By the time you wake up, it's too late. You have to control your ego. There is a proverb which says, Abhiman to Raja Ravan nu pan nahi takyu. Ravan was king of Lanka, a city made of gold. He was immensely powerful, knowledgeable. And yet, ego closed his eyes and it resulted into ruins for everything. Ego, ego, and ego. As a fund manager, we have to control that.
Absolutely, yes. Ego is just a three-lettered word but makes a big difference in one's life, whether you are an investor or a normal human being. Finally, we have all seen batting collapses in cricket. How can investors sort of build a portfolio that does not collapse under pressure? I know it is a far-fetched statement, but still wanted to put it through you.
Satish, my favorite example here is Kapil Dev's mindset. We had won Champions of Champions trophy, and then we went to Sharjah. And against Pakistan, our arch enemy, we got bundled out in 123 runs. Everyone was dejected. The world champion was looking at the defeat. Things could not have been worse than this. Everyone went into the lunchroom apparently, and no one was talking to each other. Everyone was dejected. As they were stepping out, Kapil Dev simply said, Chalo, dekh lete hain. Something like that.
Right.
The whole team went with that desire to prove that they were not fluke world champion. They were champions of champions. Each one gave. And Mahindra Amarnath, made that brilliant run out. Lakshman Krishnan bowled brilliantly. The whole team came together and we bundled out Pakistan at 83. So whenever you are 123 looking at the profit, think of Kapil Dev's advice, देख लेंगे, जो भी हो जाए, देख लेंगे. As Kotak Group, we say, हौसला होगा तो हो जाएगा.
Absolutely. Well, such fantastic insights. Thank you, Nilesh. Well, from SIPs as the cover drive to reminding us that investing is not just about drama, but discipline. This was truly a masterclass. And for all our listeners, remember, whether you are chasing financial freedom or just starting your journey, don't chase fads, chase fundamentals. Well, this is Golden Thumb Rule. I'm Shatajanand signing off and reminding you, compounding doesn't trend, but it wins.